Hello guys, welcome back to my YouTube channel. So today I am going to discuss about a simple strategy yet effective, and this is especially useful when you have a direction, okay? And even in your direction, if the market doesn't move or maybe your analysis is wrong, okay, because of certain news or so. So what happens? Shall we be in profit in that case also? Or even if it moves in your direction, so obviously since you are making this strategy considering that okay, this particular index, be it bank nifty or nifty, it will be going towards your direction, so in that case obviously you should be in profit. But what in case if it doesn't move in your direction, or maybe if it stays at the same place, or if it falls back, right? So in such situation, uh, this is going to be very fruitful. And even if obviously there is a risk of unlimited in one side, but that is a notional unlimited risk that we can convert into a very safe zone, okay, by doing some simple adjustment actually. So in such case, like what should we do, for the adjustment, and how should we deploy the strategy based on what and all, right? So let us consider and focus on this strategy. So this is maybe this might be known to many of you, but since you do not know when to deploy and what point should you consider, right, while deploying the strategy, and what short uh, uh, what kind of thoughts you should be having, okay? So every week you can make this strategy. Okay, first of all, let me clarify this. Every week you can make this strategy, and that depends on your capacity, your thinking, that how much credit you want to have out of this strategy. Okay, I would prefer 800 to 1000 points at least in worst case you should get, and in best case you can get whatever you wish. Okay, so I mean, that will depend on the market condition, but in worst case we should be having at least 800 to 1000 bucks. So this is a very famous and simple strategy which is called ratio spread, but ratio spread can be deployed in both sides, that means put as well as call. But I would suggest you to deploy the strategy only at the call side, whatever be the direction of the market, guys. Okay, first of all, the moment I will deploy this, you will see that one side is completely safe, that is the market, if market falls, okay, so this side is completely safe, at least you will be getting around 800 or 1000 per lot. Or if market rises, okay, so in that case we'll have to do some adjustment, that we will see. So this is a very beautiful strategy if you consistently deploy the strategy irrespective of the direction of the market, okay. And if you have some direction, then obviously you can also modify some of the options that I'll just discuss. So maybe you can just think based on your experience, or you know your analysis of the market direction and all. But definitely you will, I mean, this almost this is kind of, I would say, this is a risk-free strategy, although from the graph you will see, oh, there is unlimited risk. But I have a very beautiful addition for this strategy, okay, that I will discuss with you guys. And we will see how the things work and all, okay. So first of all, let us consider when exactly this should be deployed, and what should be the criteria and all, okay. So for example, I have just taken this consideration. uh, I'm just taking the example of 8th December, okay. So what is the logic? So every Wednesday, okay, every Wednesday you will have to deploy this strategy, okay. And when? At 10 o'clock. What you will have to do, you will have to come on every Wednesday, okay, and you will have to deploy the strategy at exactly at 10 o'clock, because at this point of time all the zigzag of markets would have completed, right? So we will come at this time and we will see what should we do. So we will come at 10 o'clock on Wednesday. And what should we do? We should be seeing the option of next expiry, because Wednesday and Thursday will be the expiry, right? So we will get nothing in the current expiry. So what we will do? We will see the next expiry options. Okay. So 8th December, that means we will see not 9th one, rather 16th December. Okay. So what we'll have to do? We will have to see the spot or future price, whatever it is. Say for example, it is spot is 37,000 more or less, right? So what we'll have to do is at least we'll have to buy a call, okay, which is trading above 100 or within the range of 150, 100 to 150, okay, and try to make a bit distance from the current market, okay. So maybe this is trading at 37,000. So what we will try to do is we will try to pick some 38,000 if you see, right? So 38,000, that means we will be buying an option of 1,000 point strike away. It's, I mean, this is not fixed, guys, okay, that you will have to always buy the 1,000 point away of the strike, but you will have to at least, as I said, right, you will have to have at least the premium of, 100 to 150. You can select this one also, 31, 38,100 or 200, whatever you wish. But let me just pick this one, and additionally, we'll have to sell two lots of call. Okay. So what would be the price of that? Right? This is a very important question. So at least we should be going away 3 to 400. Okay, and we will try to see that if we are getting some credits or not. For example, if I sell this call option, okay, so 102, right? So if I sell this option of two lots, okay, so see, at the lower side, that let the market finish, let the market go to zero, you will be obviously in profit of at least 1200, right? Or say suppose by giving brokerage charge and everything, at least you will be making 1,000 rupees, right, if the market falls. But what if market rises? You might be seeing, oh my god, this is a very dangerous strategy, and if market rises, then obviously I'll be in loss. But guys, always try to remember that fear is always at the bottom side, okay, instead of upside, correct? So always there is a fear at the downside, okay. The reason is why fear? Because people people invest money in stock markets, right, for the long term and all. So why the VIX rises? Because of the fear. And if market moves up sharply, if the market moves up sharply, right, or gradually, so there is no fear because people are happy, right? People are okay, making their mindset, okay, the market is rising, so we should be investing some money, and the economical condition of a country is going fine, right? So there is no fear. But if market falls suddenly because of some news or because of some events or because of some, like pandemic or this kind of war and all, so this kind of situation creates panic among people, right? So whenever there is a panic, the VIX will rise, and VIX will rise. That means there is uncertainty in the market. Market may fall 1,000 points, 2,000 points in a day. It may also rise, right? So, that is why this is always prohibited to deploy this strategy at the put side. But if market rises gradually, say suppose 800 points, 200 points, so there is no fear actually, guys. Okay, the fear doesn't lie at the upside. Okay, you will always have to remember this, and that is why whenever the market starts rising, the India VIX starts crashing because there is no fear in the market, there is no uncertainty in the market. The whatever the worst situation that was going through the market, right, that we were going through, so that has come over, right? So we should be rather focusing on the like upside movement only. Okay, so whatever, even if your market direction doesn't go towards your direction, but if rather it falls below, right, so this strategy is going to keep you in profit. Okay, but how and when? So first of all, as I said, you will have to deploy this strategy every Wednesday at 10 o'clock. Okay, and you will have to consider the next expiries options, and you will have to try to buy an options of which is trading at around 100 to 150. And you should also, try to give a big room to the market. Big room in the sense that, as I said, right, the currently it is trading at 37,000. So at least you should go away 1,000 points away, or at least 900 points, 800 points, right? And or maybe 1,500 points if the VIX is higher, then you should be. If the VIX is higher, then you should be, um, you can go further. You can go and buy further strikes, right? So what will happen is, you should give some room to markets to move around, right? To maybe market may rise sharply also, right? So we should be giving some room, and we should be giving some, space for the markets to move in, right? So in this case, what I've done is I have bought an option of 1,100 point strike away, and 300 points further options I have sold two lots. Okay, so you can see like the market will start giving me losses when it reaches at 38,500, correct? 38,500, 600, then only it will start giving me losses. This is the logical loss. Okay, but market is means at least it has to move around 1,500 points, right? So if the market moves right gradually, normally market moves gradually. I would not say if there is a very good news, the market may rise 1,000 points in a day, gap up, right? Okay, but that is fine. If the market keeps on rising, then we have a very good adjustment on this side. Okay, so what is that and all we'll discuss. But for now, just focus on this strategy. So what we have done is we have simply taken an we have bought an option of 150 premiums, and we have sold an options of such that it should be giving some credits to the downside, right? As you can see, it is giving me around 1,200 points. I mean, 1,200 bucks, right? So let us see the back testing of this. So if I just move to, say, suppose 200, okay, and whenever one more important point, guys, whenever you see this specific underlying is trading between these green zone, right? You should not be getting afraid of anything at all, even if your position is in loss, but actually this those will be notional losses. Okay, so the market is not going anywhere. See, maybe you are seeing loss of 160 rupees on your screen, but this is a notional loss. This is not the actual loss because you are still at the green zone, right? So there is nothing to fear about. Okay, it is just, what should I say? Um, this just a matter of theta decay. Okay, see, the market has just moved in 200 points downside, and you are getting profit of 600 more than that, right? So nothing to worry about that, guys. So what we will have to do is, so we just have to watch and see, because downside I am not seeing any risk at all, right? So I should not be worried at all. Rather, I should not be booking this profit 800. Why? Because I know that my minimum profit is 1200, right? Then why should I book the minimal profit? I should be waiting for that. And if the market rises here, or if it moves, at the upper side, then we have an adjustment for that. Correct. And that adjustment is a very beautiful adjustment that will almost make your strategy lossless. Okay. So let me just move forward a bit quickly. So currently we are at is C. We have sold the option of what 16 December, right? Is still we are on 10 December, and we are almost getting the profit whatever the minimum profit was. But still you can wait for this strategy. Okay, see, market was there. Market here was on 10th of December. The market was at almost 37,000. Now it has moved around 500 points. Still even a profit. So this is the logic, guys. You will have to understand the options behavior and its nature, the way it reacts, right? and the things, that is based out of this. See, even if market falls or rises, I should not be worrying because I know my profit, I know my loss. But what if, okay, so still we are in on 13 December and we are getting the required profit. I mean, that is the minimum required profit. But what if we cross or we, I mean, at least market starts rising up, and if it comes this the bigger zone, right, where we can get the maximum profit, but what should be the adjustment and all? Correct? That is the main concern. Maybe you guys might be thinking right now. Okay, so this anyway we have understood. Okay, market is not at least coming here in a day because the expiry is nearing, and we should not be giving much profit except the one that we have already seen or that is already in the system, right? So nothing is going to happen. You will have to just book this profit of 1100 and you should close the trade. But I would not say this is yet. This is done. What if the market would have moved, you know, to this level, right? To this level or to this level. What should be the profit or what should be the loss or what should be the adjustment? So guys, I have a very, very beautiful adjustment for this, okay, that I can give you for free of cost. But for that, you will have to just do one thing. Actually, a couple of things. First of all, definitely will have to share my channel with your friends, colleagues, or your, neighbors. And second, most important thing, you will have to open an account, trading account in 5 paisa, and the link for the same I'll be just giving in the description. Okay, you just have to use that link and you will have to use that code. Okay, the specific coupon code. Okay, and you will have to just send me the screenshot that you have done this, and I will give you the adjustment for this strategy for free of cost. And the adjustment is such a beautiful adjustment that your this strategy will become lossless in all the condition, even if market rises 5,000 points or falls 5,000 points. Okay, it doesn't matter at all. You will be always in profit of minimum 500,000 or whatever it is. So with one lot you'll be, and sometimes you'll be getting maximum profit maybe 8,000 or 7,000. As you can see here, the maximum profit is 8,000. So the moment you make the adjustment, this will become lossless. Okay, but how that is done, when that is to be done, and what is the logic and what is the criteria and all, for that you will have to just contact me, and I'll be sharing everything with you. The only condition is that you will have to open the account with me, and that for the link I'll be sharing in this description. Thank you.